Well, we got ourselves a big week up ahead with Meta, Microsoft, Apple, and Amazon, the biggest earnings week of the quarter coming up. But not only that, we got JOLTS data, we get GDP numbers, we get the interest rate decision, we get the press conference with the Fed, we get personal income, personal spending, core PCE, we get job reports as well. So in today's stock market brief show, we are going to show exactly what the market is pricing in, given that so much is going on. And more importantly, I'm going to show you exactly what you need to do in order to find exactly what the market's expecting each one of these names will do when they report earnings. Let's get into today's show. All right, everybody, welcome back to the show. I'm going to start off here in the S&P 500 like we typically do. And while we're still in an uptrend, the market still presses further. Now, if you watch the prior market brief, we talked about the danger zone, and that still is applicable in today's situation, which we'll get into the context of market conditions here. You can see the gamma flip line is roughly just at about 62.75. This is where dealers look to buy the dip, sell the rip. So we're still in a positive gamma environment. That is a positive sign. As far as what the week is expecting, what the options market is pricing in for the week, we're looking at a lower level at about 62.99 to a higher level at 64.78. That's for the SPX. Now you can see up here, there's actually quite a bit of confluence. You have the upper weekly implied move. You got the upper monthly implied move. And you also have the JPM dollar short calls at 64.80, roughly at around that 6,500 marker. So it's going to be pretty difficult for the market to get through these levels. If we can get up here and you feel the FOMO and you start really entering in heavy up at these levels, these would, to me, would be the levels that you want to start lightening the portfolio and or even start to take things off already and or start to just slightly protect any gains that you've gotten from this amazing rally thus far. Now you can see we are still well in positive gamma territory. This is a history chart of net gamma. So this little zero line going across the screen here, anything that's this darker blue is negative gamma. That's started February 21st, I believe. We went for quite some time into the middle of almost the beginning of May right there, where we saw all that volatility in the markets. And then once we're above the flip line, you can see especially all this time right over here, it did get rather frothy and extended, but it backed off today, which is, more of a positive sign. But I will say that this is where the time where the dealers look to buy the dip, sell the rip. Now, you might also be thinking, well, where is all this buying, really coming from? Where, what is driving this? Well, you got to understand that also there's been a huge inflow into CTA positioning. So CTAs, for those that don't know, commodity trading advisors. If you're looking for more positive movement to the upside, this is where it gets quite critical, is we're reaching levels that we haven't seen for quite some time over here since October-ish of 2024. So if you're thinking CTAs are going to be big buyers coming up, you'd be wrong. Just like how down here, when I started talking about how CTAs are going to become buyers, people were saying, no, the market's like it's, everything's over and done with. But that's the thing. They got so overly, to the downside that you got to start looking them for when they're eventually going to become buyers, and they could really remember CTAs. They don't care about how really, where the market necessarily is. Once the market starts to trend in a direction, they just buy. It's algorithm. Think of them as just algorithms. All right. So now that we're reaching these more extended levels, well, they are probably going to become sellers here in the somewhat near future. Now, it's not only CTAs, but you can also look at vol control funds. When we had that massive move to the downside in the markets, vol control funds could look to become buyers, right? And you can see that's definitely supporting the buy side of equities on this move up. But where are we getting? Well, we're getting rather frothy levels that we haven't seen since the ending of that last year. Then we talked about the gamma flip line, and we usually mention it over here, but a lot of people say, they don't understand that it's dynamic, that it's constantly changing and updating. So I figured I'd add this chart in there too. This is a history chart of the gamma flip line, and you can see as of late, since this time has been going, you can see the gamma flip line has been moving up along with the S&P 500, and as it stands right now, it's roughly at about 62.75. 75. You can see over here, traders are still reaching out further to that 6,500 call wall. 6,400 is kind of where we got stopped, in our tracks today. So we're kind of getting pinned in and around 6,400. But if we can remain above that, I mean, the door's open 50 points higher to 100 points higher. Below that, you're looking at that 60, I think that's 6350-ish level, right in and around there. I'll have to update that tomorrow morning in the Discord channel. As far as the direction of the 5-day moving average goes, we're above a rising 5-day moving average in SPY, Qs. IWM's kind of flat, but we are in theory above it. The Dow Jones Industrial XBI has been choppy. Semiconductors did break down, but now it's starting to turn green here, as that really led the markets today, those semiconductors. All right, let's continue on here and look at back month versus front month volatility. You can see we're still well within that danger zone over here. We said as we crossed through the prior sessions video, we said that it can go higher, and it did, and now it backed off slightly. But this is the area where you need to be aware that, people are preparing, traders are preparing for volatility in the months ahead, okay, or even potentially even sooner, especially when you start to see this type of spread between that back month versus front month. All right, let's just look at the SPY very quickly at its weekly implied move. We're looking at about 646 to the upside and some change. We'll just call it 647. We'll round in 627 to 6. I'm just going to round to say 627 to 628 down to the downside. Now, tomorrow's daily implied move, and this is pretty tiny, man, because vol has been getting crushed here, but 634.11 to the downside, 639 to the upside. I do have my Astrobot ranges over here as well, the iVol ranges, and that's a little bit wider, which is typically normal. And, given the context of how small volatility is, I mean, I wouldn't be surprised that we trade within these ranges and or tag one of those potential levels. We did not actually today. Today was a rather flat day, but going into tomorrow, perhaps we do, but also market might be on pause until we get these earnings and more macro reports as well. So on the short, so it's a very short time frame, volatility is coming in, but yet the week is still pricing in a lot of volatility. And I think that's going to be important to watch. Now, let's hop into how we look at these expected moves exactly going into these earnings and what exactly the market's pricing in. So first things first, if you have some sort of a trading platform, you want to go into your options chain. So this is Thinkorswim. You don't need to use Thinkorswim. You can use any platform, and a lot of platforms have expected moves. Some don't. That's totally fine. I'll show you how to do it otherwise. I also have a video there on my YouTube that shows you how to pull these expected moves. But what you want to do here is say we'll pull up Meta, for example, and you want to go to the nearest expiration. It's going to be a weekly contract here for these Mag 7 stocks over here. And you can see that the week's ending August 1st. Now, that would be the expected move that we're going to be doing our calculations based off of and where you want to pull from. However, the timing, right, this right here is my timer right over here. The timing of that's an hourglass. The timing is very important. The time to pull these are going to be leading into the earnings just before the market closes. So for example, the market closes on Wednesday, right? 1 p.m. Pacific Standard Time, 4 p.m. Eastern Standard Time. So you want to go into this about 15 to 5 minutes before the market closes and see where the price of Meta is. So for example, right now it's at 717.63, but we still have another day, right, of full trading and then another day before the earnings come. So technically 2 full days of trading before we actually report earnings. So you want to see where price is right before we're going to price earnings. And then you want to go to the options chain and you look over here. If we zoom into that, to the near date expiration, you'll see these numbers right here, this plus or minus 42.40. That right there is what the market is pricing in based off of its implied volatility and based off of all the options being traded within that expiration. Okay, this is a proprietary calculation within Thinkorswim. I find this one to be pretty valuable. I think Tasty Trade does it very well, as in my opinion as well. But these are the two that I'm more aware of, or more well aware of. And if you don't have either of these platforms, I'm going to show you what you can do. You can open up the options chain for the August 1st when the time comes, and you go to the at the money, right? You go to the at the money strike. So right now, right, where are we at? 717.63. All right, so let's go to 717.50. And then what you look at is the put side ask or the mid price, whatever you feel comfortable doing, whatever. But you can just add the asks up for the calls and the puts. So that's known as the at the money. Okay. So what you'll see here is I'm going to do quick clown math over here. 22, right? And 22, that's about $44. Now remember, I'm obviously clearly rounding there. About $44 that the market's pricing in. Okay. So 44 bucks at the money straddle. And what is this number over here? It's $42.40. So it's close enough, in my opinion. That is what the market's pricing in. Now, what you do with that information is important. First, if you have a position in Meta or Microsoft or whatever's reporting earnings, whatever stock you can do this with, and you're not comfortable losing that amount of the expected move, which, by the way, I'll talk about probabilities here in a moment. But if you're not comfortable losing $42 per share, well, then you got to do something to mitigate risk, whether that's hedging the position, taking partial profits on the position, reducing the position, getting out of the position, whatever it is that you find necessary, you need to obviously do whatever works best for you. Now, as far as the probabilities go, right, that number represents one standard deviation. And for those that don't know, one standard deviation is right here. So you got that $44 to the downside, $44 to the upside, that's right, plus and or minus, and there's a 68% probability so you got to understand. So I want to also point out this. I'm more of the 68% probability that we close within here, but I think that there's a high probability because it's based off of all the options, from, out money, in the money strikes like this, that we actually come to tag these expected moves or come very close and potentially even break to 2 standard deviations. But there's about a 70% probability, right? 68 and some change percent probability that we go and tag one of these expected moves. So if you want to know specifically what those levels are, what do? Well, you take the number 717, and I'm not going to, or 7714, right? And then you plus 42, whatever that comes out to, right? And then you go also, if you want the lower level, you go 717 minus 42, and that's going to give you your lower expected move and your upper expected move right here and right here. Now, you might be thinking, well, what if it's a 2 standard deviation move? If it's a 2 standard deviation move, you would just take this 4240, right? 4240 and times that 2, right? Or the 44, whatever, times it by 2, and that's going to equal out your 2 sigma or 2 standard deviation move. You want to add that to here and or subtract it from there as well, and that gives you your 2 standard deviation move for the earnings. So hope today's episode helped you, give you some insight as far as forward-looking risk. What is the market handicapping for risk? And to be quite honest, not many retail traders do this. Surprisingly, it's getting more popular, but this is an incredibly important thing to know heading into earnings. And also, if you are a day trader, you can look at those daily implied moves and weekly expected moves for these bigger index products and or individual equities. I also look at monthly implied moves and so much more. If you want to join the Discord group, I am going to be lifting prices, so get in while you can for only $9 a month, but I am going to be increasing prices on new people coming in. This is where I give daily, weekly, monthly, quarterly expected moves. I also just built out my Asher bot that gives you weekly, daily. I'm going to include monthly implied moves there. I'm getting that worked out right now. 2 sigma levels, the premiums and discounts. I also include the entire TradyTix suite that they offer. So you can type in all types of commands to get a bunch of different charts, bunch of different data, whatever, if you find necessary. Within that, I like to use MarketNet Flow. But then that's not it. There's a lot more right now. There's also I post some trade ideas. It's not an alert service, but I give a lot of setups, my style type of setups, right? Things that are contracting, looking for them to expand. I'll give my watch list, my tight list. I'll update that weekly. I'll give it daily zones, fractal documents to give you a good idea of where things are from a fractal view in the market, utilizing the bridge bands. Pretty cool stuff there. And then you have obviously a community there as well. Hope today's episode helped out. See you later.